Reacting to that June jobs report, we were under the mark that was expected. Hiring cooling down a bit as the economy added 209,000 jobs last month. That is weaker than expected, as I mentioned. Larry Kudlow is the host of Kudlow on Fox Business. Larry, good day to you. Morning, sir. Going through the numbers here, trying to figure it out. We had that huge payroll drop yesterday that topped out at almost 300,000. Some people are saying that's a fluke. I don't know. But this missed the mark, and we had two revisions that were lower for the previous 2 months. Your evaluation of this is what, Larry?
Yeah, look, Bill, you had the ADP report of private payrolls was up almost 500,000. But that number, I kept saying last night on our show, that number is a fluky number. It's not a reliable number. And sure enough, today's number was much lower. And incidentally, with the downward revision, look, you're at 209,000 payrolls. That's the softest number since December of 2020. But, Bill, you have to add in the revisions, okay? You lost 110,000 jobs in the prior 2 months. So actually, the June number is only up 99,000. And that's a picture of a weakening labor market, which I might add goes hand in hand with a recession that's developing in manufacturing and production. Contrary to what the president keeps telling us, the numbers are down, and business equipment is falling. When you see the business side weaken, fall, and so forth, that's a leading indicator of recession. It's not the consumer side that leads when you have downturns, it's the business side. So my point is, these were very soft numbers. And on the wage side, if I can just add to that, wages, average weekly earnings up 3.7%, okay? Up 3.7% for the month of June, average weekly earnings. That is, again, below the inflation rate. And the average hour earnings, 4.4%. That's about even with the inflation rate. So real wages are still sloping down on a trend line. So this is a very soft and disappointing report.
Okay, all right.
The trouble is the Fed... The Fed's going to tighten. The Fed's going to tighten anyway. They're going to raise their rate anyway.
I think you're right about that.
I don't know why.
I said 297. It was 497. You're right about that. Almost 500,000 jobs added to our private payroll sector from yesterday. Larry, I mean, what do you? I mean, take the temperature for us. Scale of 1 to 10. Are we a 5? Are we a 7.5? What are we?
On jobs or the economy? On jobs or the economy, Bill? Oh no, the economy's been very soft for a while. I mean, look. The last 6 quarters, okay, all of last year, plus the first half of this year, we don't know what the second quarter was exactly, but I'm going to pencil in 2%. That's what the Atlanta Fed GDP is saying, okay? The growth rate is only 1.3 for GDP, 1.3 for the last 6 quarters, 18 months. And the inflation rate is still running 4 to 5%. That's a very poor economic performance. And real wages continue to decline. You know, we should be growing this great economy of ours. We should be growing 3, 4, 5%, okay? Because we've had such slow growth for so many years, we should be blasting off if we would unleash the economy, from all this spending and taxing and regulation.
And all the smart folks say that you see no pro-growth policies for this administration. Final 30 seconds here.
Right.
President Biden was in South Carolina yesterday. He's going on the tour, and the officials from the administration they're going all across the country trying to sell Bidenomics. All right? How are they going to make that sale, Larry?
It's a tough sale, Bill. But Bill, first of all, you have to. What is Bidenomics? I don't know what it is. I mean, I can't figure it out. It's a lot of spending. It's a lot of regulating. It hates fossil fuels. It's a lot of taxing. It's not pro-growth. Traditionally, economists would say lower taxes, minimal regulations, limited spending would give you non-inflationary growth. That's what most economists would say, frankly, in both political parties, or they used to. You're not getting that now. Bidenomics is central planning, top-down, over-regulation, overspend. I mean, 1.3% growth for the last 18 months, all right, with a lingering 4 to 5% inflation rate. You talk about making the sale. Not even Bill Hemmer could make that sale out on the campaign trail.
Not my
a great
job.
communicator like Bill Hemmer would have trouble making that sale.
Thank you, Larry.
That's all I'm saying.
Yeah, I got you. We'll see you at 4 o'clock, all right? Fox Business. Make it a great Friday. See you,
Thank you.
Larry.
Appreciate it.
You bet.
All right. Thanks.